What's up, everybody? It's Amir here, and today I'm gonna go over exactly why the trend fails you whenever you get into these trades. It's a lot of reasons why this happens, and I know this applies to a lot of people. Whenever you get into these trades, you try to take these setups, and you have a strategy, and as soon as you end up getting in, you just get completely wrecked. So let's just use this for example. You see that is approaching a support level, and even here is approaching a support level, and then whenever you try to get in, it just completely just breaks through wherever you're trying to get into, and then as a result you end up getting completely just annihilated, just obliterated by the market. And then whenever that happens, like let's just use this for example, it just completely just obliterates your stop loss, and you had no room whatsoever to even breathe upon a take profit or any type of profit whatsoever. And today I'm going to be going over exactly why this happens, why you try to follow the trend, you obviously see it's going up, and then whenever you try to follow the trend, it just completely just goes into the opposite direction, as if the market is literally targeting you whenever you're getting into these trades. So one of the main reasons why this happens is because whatever indicator you're using, whatever strategy you're using, it does not give confirmation to support the direction of the trend. So let's just use this for example. It does not give confirmation to support the trend that you're trying to go into based on the past historical data of the market. So let's just use support and resistance for example. Yes, you have support right here. That's the example that I used prior. Support right here, but it doesn't necessarily support the direction of the trend. We need something like a dynamic support and resistance that really gives you an idea that, hey, once it comes to this area, it's still going to continue to go up. But once it breaks this area, that is a sign that there's either a pullback to another area, and then a continuation in trend. So a higher high or higher low in a bullish trend, or a lower high and a lower low on a bearish trend, or B, some sort of really good trend continuation sign that you can get based off of, like I mentioned, the past historical data of the market that tells you that once it does this again, then it is a very high chance that it's going to continue. And this doesn't even apply to this trend trading. This applies to trading in general, whether if you're a trend trader going with the trend, or you're looking for signals that indicates a reversal back to the downside. If it's going to the upside, you need a fair amount of confirmation based on past historical data of the market to tell you an indication is coming to where you can get into this trade, and there's a very high chance that you'll hit the trade based on the fact that, for example, we look at the market and we say that, hey, it did this 5 other times recently. So once it does it again, that's my cue to get into that trend continuation trade, and I'll end up hitting that trade because it's done it 5 times recently already. So once it does it for a 6th time, then we can go ahead and get in, and we'll end up hitting that trade. Now, the easiest way to do this is to use what I call the AEMA trend continuation model. All it does is just use one simple exponential moving average, which an EMA for short, it'll be an 8 EMA. So you'll go ahead and toggle on moving average exponential, or anything that resembles an EMA. Then once you toggle it on, it'll go to 9. But once you click on it, you'll go ahead and just change the length to 8 instead of 9. And then you'll be set up from there. I'm gonna go ahead and change our green since that's the color that I usually use. But as we can see, whenever we had price trending to this upside here, we had price and we see the EMA moving with it. Whenever there was a change in trend, we can see it right here. Price broke through this 8 EMA and then came back to the downside. And then it barely even hovered under this 8 EMA to come back up. And then once again, there was a full break through the 8 EMA. And then now we're at this point where we have price basically respecting this 8 EMA and staying under, and then it's even trying to come wick over it, but it still comes back down and continues to this downside. And then if we keep playing it, we can see continuous wicks under this 8 EMA. And then if we even keep playing it, we can see that price wicks under this 8 EMA and then still continues to this downside. But that is a very good example of a trend supporter And if you're trying to get in with the direction of the trend, you need something that's going to support the idea of actually getting in with the trend. Because if you don't have anything that supports you getting into the trend, or if you don't have anything that's recently supporting you getting into that trend trade, then you're not going to be a successful trend trader. Because the only way that you can end up getting into high quality, successful trades is if you have the right confluence to tell you that whenever you get into it, there is a high probability that you will have a positive return on investment whenever you get into this trade. Now, you may be wondering, how exactly do I use the 8 EMA trend continuation model to actually hop in trades with the trend? Because I can say all day, okay, it's going down, but what exactly tells me that once it does this specific thing, then we can actually put in a trade to actually be profitable? Well, I'm glad you asked. So let's go ahead and just analyze this example that I already gave. There's 2 steps to actually getting into a trade, and I'm going to go over both of them. So the first thing you want is to see either A, lower highs and lower lows being formed under this 8 EMA if we're in a bearish trend, or if we're looking at a bullish trend. Let's just use this for example. Let me go ahead and zoom into that. If we're looking at a bullish trend, then we want higher highs and higher lows to be formed over this 8 EMA. So if we see higher highs and higher lows being formed over this 8 EMA, then it signals a bullish trend going to the upside. And if we see lower highs and lower lows being formed under this 8 EMA, like this example, then it signals a strong bearish trend going to the downside. So once we have that specific trend established, then we know exactly what direction we're going to be getting into whenever we get the last step whenever it comes to these trades. So now we're going to go over the last step, which is a clean rejection candle off of the 8 EMA. And we want to see some past historical data, like I mentioned before, to let us know that if we do get that clean rejection candle off the EMA, then it's going to do exactly what it's been doing prior to us entering the trade. So whenever I say clean rejection candles, I mean these candles specifically. We see that price is pushing down, and then it comes back to this 8 EMA, it pulls back, and then it continues to stay under the 8 EMA, and then it makes a huge push back down. So what we don't want with price is we don't want to just simply see, let's just go to a higher time frame to show you what I'm talking about. We don't want to see something like this to where it's just simply just pushing down. Whatever time frame you're trading on, you don't want to see it just simply just push down like this with a lot of room to spare in between this 8 EMA, because that doesn't necessarily signal anything as far as cushion whenever it is this far. Because let's just say that we get into this trade right now. Let's say that just for this example specifically, we see that price is respecting the 8 EMA, but we have price that's located right here. We end up getting in, and in order for us to have any type of cushion on this 15-minute, we have to have at least 1,000 ticks to spare on this 15-minute time frame, which is a lot. That can be a day's worth move whenever it comes to the market, and depending on how volatile it is. So what you don't want is for price to be too far below this 8 EMA, because it could come all the way down to this area, and then it could push back up and then immediately just break through the 8 EMA. What we want price to do is first be located right here, but we want it to continue to go to the 8 EMA. We want it to pull back to the 8 EMA and then see a confirmed rejection candle to let us know that, okay, price has been coming to this area, but we need to do it one more time. And then we need to see signals of respect to let us know that whenever we end up getting into this trade, then we're still good to go. So let's just use this for example. It ended up trying to make a push up, but we had a confirmed rejection candle right here. And then once we get in, let's just say that we get in with, let's just say 500 ticks. As we can see, instead of 1,000 ticks of stop loss, we have 500 ticks, which is completely manageable. And on top of that, we also have enough room to spare to the point where price is still under this 8 EMA, and we're not risking too much in tick value, but it's still to the point where we see this pullback happen and it forms and it tries to go over the 8 EMA, but it doesn't end up going over. And then if we continue to play it out, then we see that we end up hitting our take profit. Let me see. Actually, we didn't hit our take profit yet, but I'll go ahead and keep going, and then we end up hitting our take profit right here. So that's a good example of we need to wait until price pulls back first, And there will be times where you can get in on this candle that I mentioned, and then it'll continue to push down. But what you don't want is for price to come down right here, and then it closes right here, and then we have another bullish close up here, and then another bullish close right there, to the point where it ends up hitting our stop loss. Because if we end up zooming in on this and we do 500 ticks like I did on this trade, then we would have either A, been super close to hitting our stop loss right here because price already made a push up. B, it ends up hitting our stop loss and goes maybe to right here, and then it ends up coming straight back down like we see in price right now. Or C, we just end up completely just hitting our take profit with no hesitation. But the key is we want the third thing to happen, but we need as much confirmation as possible to actually have that happen. And we want to eliminate as much of the drawbacks that we can have eliminated as possible to ensure that our trades are high quality and really good entries. So let's go to that 5-minute example one more time, and I'm going to show you exactly what we're looking for whenever it comes to these entries. So we see that we have those pullbacks that I mentioned right here, and we have the lower highs and lower lows being formed under this 8 EMA to signify that bearish trend. So now what we need is a pullback to happen, but in order to get that pullback, we obviously need to be patient. So let's go ahead and simulate that patience by skipping through the bars, and I'll show you exactly what we are looking for whenever it comes to this trade. So we see price continues to push down. We have a bullish candle right here. We have another bullish close right here, and we can see that price ended up coming right here. And whenever we have this pullback and rejection candle, there's two things that we're looking for in order to either get into this trade. So the very first thing that you're going to need is either a wick over the 8 EMA. So price comes over this 8 EMA, like these candles that I mentioned, we see price wicks over the 8 EMA, or we need B, it comes to wick near the 8 EMA equilibrium zone, which is the area around the 8 EMA. And then finally, we need a close under the 8 EMA to solidify that the trend is still heading to this downside. So the reason why we can either have a wick over or just near that 8 EMA equilibrium zone is because of the fact that even though we're actually trading on this 5-minute time frame, if we see that price is respecting this 8 EMA and not actually wicking on the 8 EMA specifically, we can go back to a different time frame to see that price was respecting this 8 EMA. So we have price that almost went over this 8 EMA, but the reason why it seems like it actually did go over the 8 EMA is because price ended up respecting it so much to the point where this bearish candle was so strong. And since it was so strong, we have an exponential moving average that moves with the lifetime of price. So it ended up pushing the 8 EMA down to make this seems like it really didn't respect the 8 EMA that much. But in actuality, it ended up closing under. And then since it closed under, it showed respect, and this bearish candle was formed back to the downside. So all of that was said just to emphasize the fact that we don't need a clean rejection off of that specific time frame that we're trading, because if we do see some type of rejection, we know that if we go to a different time frame, then that time frame was respected, and then the 5-minute just ended up having respect as well, just a little bit further down in this bearish trend. So let's use this candle for example. Do we have a wick over the 8 EMA or near that 8 EMA equilibrium zone? Yes, we do. We have this 8 EMA equilibrium zone that's located right here. Price ended up coming to it and then ended up coming to right here, but it did not end up going to the 8 EMA, but it simply just ended up going to that zone and rejecting off of it. And then the second criteria is that we need a close under the 8 EMA, because in order for us to actually get into a bearish continuation trade, we need confirmation that it's going to actually close back to that downside. And does this candle fit that criteria? Yes, it does. So since it ended up fitting that criteria, and since our other one step was actually reached and required, we ended up having lower highs and lower lows being formed under this 8 EMA. And then we had a lower high form right here. And then it was a rejection candle. Then it ended up closing under. And then now we have a final signal that we can actually continue with the trend, and we're not blindly just getting into the trend trade. So now what we're going to do is just go ahead and get into this short position. Let's just say we target, let's just say 300 ticks and 450 going to the downside. All depends on your risk to reward, but what we want our stop loss to be is sitting comfortably over this 8 EMA in the bearish trend trade, or comfortably under the 8 EMA if it's a bullish trend. So if it does end up breaking through that 8 EMA, we still have another time frame that supports the trend. But once we get into this trade, we can see that I'm sure it ended up playing out. I ended up going back up a little bit, end up rejecting right here. We see two rejections, one off the equilibrium zone and then one off the actual 8 EMA itself, wicking off of it and forming this shooting star. And then we continue to play it out, and then it continued to go to this downside, continues rejecting off of this 8 EMA. Then we continue to play it out, and then we end up getting out right here. So we got out right here, but we can see that the trend continued to this downside, and any of these could have been entries to get into a bearish continuation trade and could have been a profitable setup, because we see that price continues to stay under this 8 EMA. We continue to have respect going to this downside, and there's no reason to even think that there is a reversal in trend if price continues to respect this 8 EMA on this time frame. And it's the same thing going bullish. All you need to do is just make sure that you have higher highs and higher lows, and then a rejection candle. If you found this YouTube video helpful, go ahead and drop a like. Subscribe for more content like this. I help unprofitable traders turn profitable. Comment any questions you have or any concerns that you have regarding this strategy. Feel free to drop them in the comment section. I'll be happy to answer anything. Go ahead and click the link in my bio for a 7-day free coaching access. I help traders just like you with their live accounts, with their funded accounts, and trying to get past that eval stage and whatnot. But other than that, I'll see you guys in the next video.